Cool, man. How's it going?
I'm good, man. I'm in the Caribbean right now on a cruise heading back to Miami area.
Dang, life is good. Life is good.
hmm
What are all the stops you guys have done?
We did St. Thomas was yesterday, and then we did San Juan, Puerto Rico. What was the other one we did? I'm forgetting the one we did 2 days ago. Um, oh yeah, we went on a private island. We're on Princess Cruise Line. It's their private island.
That is sweet, dude. I do that all the time when I'm flying. I'll like literally just land somewhere and someone will ask where we came from, and I'll have to think for like a minute. Where did I literally
hmm
just what state was I literally just in? I have no idea. That's cool. So are you working as well, or when you do these, are they like completely vacation?
I would say 60-40 vacay. Where
60.
like for today, like I have this call and then I have four more calls after this. Then we'll do meet up around lunchtime, and then we'll play dominoes, have a couple drinks, and then this afternoon I have about 2 hours of back to back meetings. So today I'll probably do like 4 or 5 hours.
Nice. Did those projects ever get finished up? The developments you were dealing with?
So the one since we last talked, last year the Seattle one that was done, the
Yeah.
Tacoma one that was the one that was left. That one we got the permit or the short plat finished. So now one is now actually three.
Okay.
The two existing homes, one of them is already sold, which has been like that for a while. The contractors, fixing that one up now that it's separated, getting the permits, and then that should be done by the end of the year. But in terms of the existing manufactured home, that one is fixed up. It's closing on the 15th. So was that almost like 2.5 weeks from now? The issue on that one is that, and this is kind of the sign of the market today, we're on the third buyer already. So it's supposed to close in April. So that one fell through. Then close in May, that one fell through. And then now there's this one. So praying that this one goes through.
Dang, dude. I heard a hot take kind of on a podcast. I don't know if you've heard of Meet Kevin. Have you seen that
Yeah.
guy? So he was on the podcast talking about how his one of his main business, I think it's called House Hack. It's like a institute. He's becoming like an institutional buyer in a way where
Yep.
they're raising money and buying. Uh, I don't know if it's apartment buildings or not, but his whole thing is everybody is kind of outside of the real estate world right now. Nobody's as excited as they were 5 or 10 years ago, and that's why he's doubling down because he's still buying them at a discount. And then in 10 years from now, he thinks interest rates are going to be like closer to zero again. And then
Mhm.
at that point, he's almost like making a call option on real estate where he's going to be able to refinance all this real estate at like 0% interest, basically, and just
Mhm.
double his portfolio. Do you agree with that? Or I don't know if 0% would be realistic, but
He's probably talking about Fed fund rate 0%, which would translate to probably around 3% in terms
mhm.
of purchasing homes for retail, and then investors typically 0.5%. So that'd be, call it 3 to 3.5, 4% for investors. Will it get back there? Yeah. I thought it would have been there already, but it hasn't gotten there yet.
Well, the new chair we're getting, Walsh, I've heard he's not
Mhm.
gonna do anything except for keep them the same, and that I haven't looked into that too much, but so it sounds like there might be a good chunk of time where we might stay with where we're at right now, but
It
I
seems like that where it's like, why change it? It's not horrible and it's not great, is where we're at. And they're like, well, if we change it, could get much worse. So maybe he waits, which is ironic because they have, I don't know how many thousands of people and like billions of dollars of budget for that group. And
mhm,
they just change that one number. It's like, do you really need that many? Do you really need that many people if you're just tweaking that one number? So,
yeah,
but there could be a lot of stuff in the background we're not seeing.
yeah, it just none of it makes sense to me, like, the stock market just keeps going so much higher and higher and higher. And there's this company called Micron Technologies. You've heard of them, probably. They're
Yeah.
They're at like $930 right now. Like I
Uh-huh.
bought them when they were like at 170. I didn't think they could go when they were at 450. I was like, what? There's no way they're gonna go more. They're at like 900. They went up 18% in a day. Like it just blows my
Yeah,
mind how much money is just pumping into these companies. And I don't know. I sure hope we don't see a recession, but or a complete collapse. Uh, Seems like real
which is
estate a place to be
I
though. I thought.
remember right. And that the I don't really own any stocks anymore. I mean, through because I have the agent business. There's some stocks that I get for through EXP, but
Mhm.
nothing major. Um, the last time I was like actively, this was back in the W2 world. We're obviously had the Amazon stock, but one of the stocks that I was interested in at the time, it was call options on Micron at 70. And gosh, this was, I think it was 2001, maybe, or maybe it was even more before that. But it's kind of flashback where the whole reason it was going to go up was obviously they're a tech company, and it's funny like if I would have kept those or exercised those call options at 70, and you just said it was 900,
Yeah,
so
9 something, like 920 something, I
it'd have
think.
been like 14x or something, right? From where I was gonna buy it at. But you know, it just goes to show you right now, or you're on the younger side, so you probably don't remember back in 2000. I was in college, like 2000, 2001. It was the same. Everybody knew about every stock, and it was all going up. And then obviously, .com boom, everything blew up, which seems like everything's in this AI stuff, and it's so central into these couple where if the market goes down like 20-30%, it impacts everybody. And so it'd be like total overnight kind of swing.
Yeah, 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 it's crazy how everything is connected, like, it's almost like an emotional graph of the richest people in the world that just affects every facet of life, but,
Exactly.
you
Well, I'm
like
I'm gonna be interested to see, because it can't go like that obviously forever. So when it does start tweaking down, do people hold on, or do they end up selling? So
right,
I don't own any stocks like I was saying, but my fiance does, and we've been talking about, does it make sense to move some, 25, 50, 75, or even 100 of the stock into something
right.
else,
Yeah, low risk.
bonds or something
Cash
like that, right?
flowing.
Yeah.
Yeah, I've always had this analogy or thought in my head. I don't know if this is makes sense or if someone's already said this before, but it's it's almost like the economy is a macrocosm for a company, which is like a macrocosm for an individual, and they all kind of operate the same way. Like the
Mhm.
economy, they have their GDP. What's the product that they're putting out in the marketplace? They have their
Mhm.
debt that is funded by the U.S. taxpayer. They have productivity growth, they have recessions if they're not improving for 2 quarters. And then a company kind of works in the same way, where if they're profitable, how much debt do they have? How much money are they spending into research and development?
Mhm.
What's the profit and loss sheet on their budget? And then a person kind of works in the same way. Like, what kind of person would want to invest in? Somebody that's super over leveraged and spending way too much on things that don't make sense. Like, you can kind of evaluate everything in a capitalist kind of framework. Maybe somebody said that before, but to me, that's kind of like, I always have that in my head. It's like, how much are you like? How would an investor look at you as a person? Does that make sense? Have you
Mm.
ever thought
Well,
about it that way?
yeah, yeah. That's getting flashback to my MBA course, because the GDP is a function of, I'm thinking back, it's like net imports, government spending, consumption, and yeah, one other component I'm forgetting. But the biggest one, I want to say it's like 40% of the equation is consumption, which is people. So you're talking about individual economies and everything, and as they expand and contract. And where we're at now, it seems like the individual economy for people, and it's definitely, I'm biased because I'm in Seattle. There's obviously a lot of tech companies. This last round of layoffs where it becomes personal, because now actually the people that are getting laid off, and that these people all are making 200, 300, 400,000. So you get a lot of those people who, those ones have a lot of discretionary. That's the money that drives the economy, right? They're buying the food, they're buying stuff for the kids, whatever it is, right? So as though that spending starts decreasing, the the companies that were living off of those people are definitely going to see the downturn. So for me, I think it's already started. It's just being covered, masked over by all this stock market, right? So, and if you look at it, there's some other factors in there where, like, you know, Bitcoin took way off. Now Bitcoin came down. So I'm assuming that money for a while it was going in stocks, and it kind of came out of stocks. Then it went into gold and silver, and then it kind of came out, and that now it's all into kind of stocks, right? Because there's this money is always moving around trying to find the safest spot for it. And so right now it thinks the stock market is, so, which could be good for you and me as real estate investors. We can start, if we can get stuff that makes sense today, it only gets way better as interest rate comes down.
100%. On that note, I have a segment that I want to do.
Mhm.
I'm going to share my screen. I
Yeah.
don't know if you've seen this sort of a graph before. Let me see here. Okay, so basically how it works is you have S tier through F tier, and
Mhm.
in order of the quality of the strategy. And
Yeah.
I'm gonna have you rank these
Mhm.
from S tier down to F for each one. So let's start with, or I guess you can just pick whichever one you want and then rank it and why.
Yep. And then S being the best and F being
The
the,
best.
or,
Yeah.
okay.
So yeah, just pick whichever one.
Mhm. I'm just reading 1, 2, 3, 4. Okay, so there's more options obviously than what's available. Okay. So in terms of,
Well, you
I
can
would
stack
probably put,
like you can have multiple of them
oh,
in S tier.
yeah, I would put number 1 buy and hold, and then you could probably put house hacking right next to that one.
Okay.
So there's like the house hacking, um, is more of a, anybody can do that, versus buy and hold. Got to have a little bit more money because you're buying and holding. Because you can do buy and hold and still rent, right? Similar to
Right.
what I'm actually doing right now. Number 2, is that one in the middle?
This
Oh,
one?
seller finance. Okay, yep. And on my side, I'm thinking, like, what can I make money the more safest? It's in terms of, like, most people can play in this first quadrant, or the S that we're talking about. Some of these stuff that are in here is even more and more difficult for people.
Yeah.
So, you could put in, like, the next one that you could do would be a REIT. So a REIT's basically a mutual fund of real estate.
So you're thinking A tier?
Yeah.
Okay. Interesting.
So on that
Uh,
one, it's like anybody can do it. Now you're betting on the operator to make sure that they're actually doing it in a way that they can be profitable. Let's see. Next one in here, I'd probably do. Um, I'd probably put real estate agent, wholesaling, or effectively, you're doing the same thing. You're trying to find sellers to sell
okay.
to you. One is you sell, you then list it on the market. That's a real estate agent. Wholesaling, you then find the buyer directly and then connect the buyer and seller.
So where are you thinking that goes?
I would put that, just to fill out through F. I'd put that in B. Put those
You
two
don't have to. You
there.
don't have to have one for every
Oh,
single one. Just wherever you see fit. But we
yeah,
can. Okay, we'll go B.
yeah. ADUs, I would put that. Now, is this, if I put this towards me, I'd put ADU up in the top for S.
Okay, yeah, it's for you. So,
Okay, so then versus like, standard. All right.
and then I'm gonna post this in the school community so people can see. I'll send you a copy if you want.
So, okay, so I was making it generalized. If it's me, then I'm going to move REIT down and real estate agent and wholesaling up.
Okay, so where are you gonna move a REIT to?
Uh, you can leave it in D for now.
D. Okay,
Yeah,
and then
and
move
then
these up.
yeah.
Okay,
Then I would put in the seller financing, novation, sub two. Put that into. Let's put it in B.
okay,
They're all kind in my mind. They're basically the same thing.
just
It's
creative
they're
financing is
all
it?
they're acquisition methods. Does that say RV parks
Yeah.
and REI? Okay. So I do Section 8, Airbnb, fix and flip. I put that in C.
Section 8, Airbnb, fix and flip. Okay.
And then I'd move the REIT down.
To E.
Maybe put that on F. And then I'd put um, mobile home parks probably D.
Interesting.
And then REI. That's a development. Let's
Yeah, this
see.
is like real estate development. It's hard to find a picture for that.
I'll put that in E.
All right.
I mean, effectively, that's, how I'm investing. Actually, if you swap D in REI development,
Okay.
because this is almost exactly what I have, right?
Yeah. So yes, you're buy and hold house hack. This is kind of how you started. Buy and hold is your main
Yeah.
strategy. You do some of this. You're also a real estate agent that does a one-off wholesale deal when you need to, kind of the same strategy.
Mhm.
Just a way to buy it. That kind of feeds into the other ones. Obviously, now this C class is not
Mhm.
necessarily your main focus. It's a
Mhm.
viable strategy probably if you wanted to, and then this stuff you kinda don't mess with that much, right?
Yeah, and I'd probably if you move the fix and flip down to D, because in my mind, like Section 8 and the Airbnb, that's a revenue generate. Like, what's your tenant base going to be?
Yeah. I guess that's about yeah, when you had REIT up there as, like, right below buy and hold, I'm like, "Man, I don't know if that makes sense,"
That
but that's like general advice.
Yeah. On the thing about the REIT is if everything up above it, like I control,
Right.
90%, if you will. The REIT, it's like all you control is how much you're going to buy and when you're going to buy it. So you have very little control. And I actually did own a REIT way back early 2000s.
Mhm.
And it was not much. It was like 5,000. When I got out, it was like maybe 5,000. So it was like the whole time I had owned it, it basically did nothing. And I'm like, I mean, I can do that myself, right? So, but
Yeah.
if you're at some point in time, like, for the people who don't want to be hands on, meaning, because owning real estate, you have to do stuff. There's the taxes, there's the property management, financing, and insurance, all that kind of stuff, right?
Mhm.
If you want to get out of that, the REIT is the easy option to get real estate exposure without having to do the work.
Right. You just, sell it, and then you're done.
Hmm.
Okay, cool. Yeah. So that was basically it. But it's on Canva, so I can just download that picture. I'll post it in there. It's kind of interesting for people to
Hmm.
see. 'Cause I bet that would be pretty different depending on who you ask. Like even just within
Hmm.
the real estate industry, some people are gonna have
Hmm.
their preferences, but I think that lines up with what I would have thought you would have done. I got one more. Not that you need another business idea, but something I heard that you might find interesting is the idea of doing a newsletter and
Hmm.
getting subscribers running Facebook ads. I think you cut out here.
Hmm.
You still there?
Yeah, I can hear you.
Cool. So yeah, so I'm trying to set this up for my wife to do it because she doesn't obviously have a whole lot of extra time with the little one, but it's one email per week and targeted to a local area. So it would be North Fort Worth family activities because we do know like all the best little restaurants and splash pads for kids and places to go. And you can get apparently
Hmm.
for 50 cents per subscriber. So if you spend $1,000, you'll get 500 subscribers, and it'll be one newsletter a week that's just value packed of personal experience, handwritten, not ChatGPT, and 50 cents subscribers, you 500 subscribers, and then through that newsletter base, you can ask people if they want to run ads for your targeted newsletter because you're only going to have people in that general area. So you could, car dealership or mechanic shop, restaurant, whatever, they can put their ad in your newsletter, and I thought that was a good idea. So I'm gonna try to have my wife do that. It's just one email a week. She probably would like doing it anyways. But then I was thinking that could apply to other businesses as well. Like if you could get a pretty good subscription base, it's almost like lower friction than a YouTube channel where you have to like watch. Just like who wouldn't mind one email that's just trying to provide value. And then through that subscription, like how many 10,000 people or whatever get your email every month. I bet there's a lot of products and stuff that you could put affiliate links or advertising for. So I think I might try to do that with this as well. But I don't know, just a thought I had to figure out to bounce it off you.
100%. The key is on that one is getting the people, the talking about what you're already doing. That's the easy part.
Hmm.
The converting people, because then you got to go around and talk to all the businesses. So if you're already in there, then you're at the dinner, talk to the manager, and hey, would you be interested? But you still got to convert the advertisers to sell to you. That
Exactly. Yeah.
one's a little bit more work now, but it is hyper focused, so it could convert for the advertiser.
Hmm.
If you do something where you mentioned links and affiliate links, where if you make that more of a broader topic, you could get more reach and do these affiliate links. And once you get the affiliate link, you literally don't need to do anything at all, right? So if you
Right.
go to Amazon, you get the account set up, and you can talk about whatever the product is, do the video, or talk about it in the newsletter, and then you can get paid off of that.
Hmm.
A little bit. The conversion to income would be easier. Now, um, but if you're local, it's one of those. It's like locally, you might be able to get more dollars per person on the advertising and more guaranteed up front. Versus if you're doing these affiliates, it's more of a bunch of small hits over time adding up.
Yeah. The guy I heard the idea from was saying that 10% of people are business owners. So you could just use your subscribers, basically like send out an email ad that says your ad here, 500 bucks,
Hmm.
put your business in this local targeted newsletter, and you could maybe get your advertisers from the people that are already getting your subscription. But I
Right.
agree. The affiliate link, especially if you have a lot of people that actually read it, you could just put in a link, and if it's relevant to what you're saying, I think that's a good thing. So, but yeah, I
Hmm.
might do that with the school community and just in general, make a weekly newsletter and then run ads to get people to subscribe. Because once you have the audience, I think then you can really start to like leverage it, and just might as well have something going in the background that's a couple years from now, maybe you have something you can monetize pretty efficiently. So
Well,
yeah.
on your side, there's like so many ways that and I'm trying to, on the agent side, effectively it's a newsletter because you put all these people in a CRM. Then it's just a matter of putting out the content. But there's a lot of ways to make money off of that just with the affiliate links, right? So I have the neighbor, which is the parking lot. There's insurance providers that are out there too.
Mm.
Um, let's see. specifically steadily on the investor side of insurance providers. So you can get an affiliate link with that. And then there's typically affiliate links that you can get for, because right now, like I've been sharing who I use for taxes and then for bookkeeping, right? So I've been trying to get them to give me a referral link as well, right? So and those are like evergreen models, right? Meaning you can always have it in the corner of the newsletter or, on your website or whatever. And they're constantly there making you money.
And for you and your side of things, couldn't you also raise private capital from a newsletter? Like you talk about a deal that you did, and then
Mhm.
every now and again, people have been seeing these and, oh, these projects went well. And then you put in there, hey, I'm looking for X amount of dollars for this project. Let me know if you're interested. Have you ever done something like that?
Usually it's more hand to hand on that stuff.
Okay.
But totally you can do that. Now, the way you do it and how many you have, and that's where you get into the securities and exchange. From what I understand, if you are doing, I think it's like 4 people or less, and do like a joint venture, then it's not an issue. But let's just say I sent it out to, like, if Meet Kevin sent out his newsletter and had like 1,000 people at $50 add up to buy a house, right? That would be like effectively a syndication. Now you're in the, governed by Securities and Exchange. So I'd
Accredited
I'd want
investment.
to put it out there, but just keep it smaller, because I think if you only had it like 4 or less, I believe, then you wouldn't run into all the incremental um, compliance type stuff.
Right. Yeah, there's a lot of hoops to jump through with that. I think you would have to. I think because isn't it if you have an accredited investor, that's when you can
Mhm.
start raising money from the public. Yeah, there's certain. But anyways, something to think about. So that's all I got for today. You got anything to add or any?
Let's see. I just I mean, I think the hot topic in the real estate space is obviously the Brandon Turner syndication that lost money in Texas.
Oh,
There
I
was a
didn't even know
couple, yeah. So it was on Instagram. Well, there's a couple interesting things that came out of it. One of them was it was obviously a large number, so it was his first one that went bad, which I was kind of surprised that it's actually the first one, because there's a lot of people that have invested with him. I mean, he's got probably billions in management. And so I was thinking there'd have been more that had issues, right? But this is the first one where it's actually transacted. So there could be others that have not been paying out on a monthly basis, like holding the income. But this one actually they exited. So once you exit, like the actual loss happened. So it was 15 million was the dollar amount that he lost. There
Dang.
was so the fact that it was just the first one surprising, right? Because he's been doing that for 6-7 years, right? The second one was and I heard this on Instagram, then I watched it with Michael Zuber on One Rental at a Time. He Zuber was saying that he's friends with Ken McElroy. Ken McElroy said and this was, I believe, in Dallas. He goes, just in Dallas. It was either Dallas or Texas, one of the two. That Ken McElroy said there's over 1,000 similar properties like this. And I was like, because if that's just Dallas, right? Then you got Fort Worth, then you got, then New York, LA. You got all these other. If it's really that bad, that's like massive. So maybe that's the thing that implodes, because like if you look at the .com, imploded from all the overabundance into stock. Then you had the real estate crash, right? And so maybe the next, and then you had the COVID issue, and then maybe this one is AI slash. We still haven't seen the full impact of these high interest rates. So,
Right.
and I'm actually coming into this myself. We bought a property in 2022. We need to refinance in 2027 January. So we're 3 to 6 months away from the same exact thing that Brandon Turner was facing. Now, ours is not, I don't believe, as bad of a scenario. The value has gone up, the incomes have gone up, the the question will be is what we can get for a loan and in terms of rate, and then the loan to value. So if we can keep the same loan to value and it's a higher rate, I think we'd be able to effectively cash out refi. We might have to bring in 10 to 20K per, which would be around, call it 50 to 100K into the deal to keep it going. So it would be what is called a cash in refi versus a cash out. So now that potential, we could be in that same scenario. It's just obviously much smaller scale. It's just me and three other guys, but we're in the same scenario where, because in 2022, that's when the rates really took off, right? Commercial debt for the most part is all 5 years. 5 years is 2027. So even if you were the last guy, which ours was at 375, right? So we're going to go from 375 to probably 6.5, 7 in today's interest rates. So you're talking about doubling, which in fact effectively doubles your payment, right? So the only way to service that is to have a lower debt balance. So we're going through it right now. We're just finishing up 2025, 25 financials, and then we've already started talking with the bank. So at which point we'll figure out, okay, what can we afford, and do we need to sell it? Because like if we're not able, let's just go to the extreme. Let's say each of us had to bring 100,000, which I don't think this would be the case. But if it was 100,000, would we even do it? I don't know if we would do it. We might just say, hey, let's sell it, take the equity that we've gained. If I had to guess, we bought it, I think around 1.1. It's probably worth, between 1.6, 1.7 would be my guesstimate. So there is some equity there. But the question is, do we want to put another large chunk of money in there to keep that? Or do we just take the money we can get today and then move on?
Jeez, that's stressful, but that's part of the game. It's better than the alternative of not having it and not making money and doing deals.
Oh, 100%. Yeah. I'm I think we'll have by the end of this month the taxes, right? Which then obviously the taxes then translates to your how the property is performing. NOI, net operating income, is over your debt payments, is the
Yeah,
debt service coverage ratio. We need to know that number, which then translates to how much we can borrow. If
yeah,
that number translates to a high enough number, then we can refi, and obviously our cash flow goes way down because our payments go way up. But in a perfect world, we're able to keep it and not have to put money into it to keep it going. So uh, let's see. By the end of Q3, we'll have for sure an answer. Either it's on the market or we're refinancing.
dang, we'll see how it goes. It's going to be national headlines like Brandon Turner. Everyone's going to be
Oh
talking.
yeah. Oh, I mean, we're just these small stories that add up to large numbers, right?
Right.
And there's literally millions of people, I would imagine, like Brandon, like myself, that are all in this. If you have a commercial debt, 5 years is the term. So 2027 is the year. By basically the end of 2026 is really all that's going to come to fruition.
That's crazy, man. It's going to be a wild next few years in the
Hmm.
finance and real estate world. But all right, man. I kind of have to end it here. Got to go to a
Sounds good, man.
pediatric appointment. But yeah, it's good talking to you.
Sounds good. Talk to you next week.